Hello everyone and welcome back to our podcast. Today we are talking about something that can play a huge role in our financial future. IRAs, which means basically individual retirement accounts. A lot of people have heard the term IRA, but many aren't sure how they work, who can contribute, what are the tax benefits, or even which type of IRA is right for them. So today we have our expert Anirudh with us. Okay, so he will be breaking it down for us in the simple terms. So welcome to the show again, Anirudh.
Thank you. I'm absolutely happy to be here.
Great.
IRA is one of those topics that sounds complicated when you first hear about it, but once you understand the basics, it becomes much more easier.
Awesome. So let's get started with the basic itself.
Okay.
So what exactly is an IRA?
Okay, so an IRA stands for Individual Retirement Agreement, but it's commonly called as an Individual Retirement Account.
Okay.
So essentially, it's like a tax-advantaged account that's designed to help individuals save for their retirement.
Retirement types. Okay.
Yeah. So, but the important thing to understand is that an IRA isn't itself an investment. You can think of it as a tax-advantaged, container.
Okay.
So inside that account, you may be able to invest in things such as stocks, bonds, mutual funds, ETFs, and other permitted investments.
Okay.
The tax treatment depends on the type of IRA that you have.
Okay, so let's say if someone says I have an IRA,
Okay.
that doesn't necessarily mean they have invested in one particular product.
Correct, exactly. So the IRA is the account. What you invest within that account is a completely separate question.
Oh, okay. So then let's go to the other question. That is basically what are the different types of IRAs as you told?
Okay, so for most individual taxpayers, the two major types to understand are traditional IRA and Roth IRA.
Okay.
With a traditional IRA, contributions may be tax deductible depending on your circumstances. Your investments can generally grow tax deferred, and withdrawals in retirement are generally taxable.
Taxable, okay.
Okay.
And Roth?
Now, with Roth IRA, you contribute your money that's already been taxed, so it's pre-taxed money.
Oh,
so you don't generally receive a deduction for the contribution, but any type of qualified withdrawals later on can be
tax-free.
Yes.
Oh, great. So essentially the traditional IRA can potentially give you a tax benefit today.
Yes.
But while as the Roth IRA can potentially give you a tax benefit when you withdraw the money later.
Yeah, correct. That's like the most, or that's a really good way to think about it actually. Traditional is more about potentially getting the tax deduction now. And then Roth is, like you said, it's more about potentially getting tax-free distributions in the future.
Great. So, who can actually contribute to an IRA? Does everyone qualify for that?
So there are eligibility rules, and they can differ between traditional and Roth IRAs. For example, let's say for traditional IRA contributions, you generally need taxable compensation or earned income to contribute.
Yes.
Right. And then for Roth IRAs, you also need your taxable compensation. But there are income limitations in both of them that can either restrict or eliminate your ability to contribute directly to a Roth IRA.
Okay.
So taxpayers should look at their income and filing status mainly before simply making a contribution.
Okay. So then what about someone who doesn't have a job at all but still wishes to have an investment income?
Okay. So investment income by itself generally isn't considered compensation for purposes.
Okay.
Making a regular IRA contribution, right? So that's an important distinction. IRA contribution eligibility, it generally involves around your qualifying compensation.
Okay, then let's talk about the numbers itself. Okay. How much can someone contribute to an IRA?
So the contribution limits are set by the IRS.
Okay.
Right. That generally changes from year to year. And there are also different rules for people who are age 50 and older because they may qualify for an additional catch-up contribution.
Okay.
So rather than assuming that the limit is the same each year, taxpayers should always you check your applicable limit for that specific tax
years. Okay. And I assume someone can't just contribute a huge amount or unlimited amount because they just want a bigger retirement account. Correct.
Yes. So Your IRA contributions are subject to, annual limits and eligibility rules.
Okay.
So contributing more than you're allowed can potentially create an excess contribution, which tends to lead to, tax consequences if it's not corrected properly.
Okay, so this is probably one of the pretty much the biggest question most of the people have. Like, if I contribute to a traditional IRA, do I automatically get a tax deduction?
No, not necessarily. So let's think of it like this. So whether your traditional IRA contribution is deductible, now that can depend on several factors, which is including your income, your filing status, and whether you or your spouse are covered by a retirement plan at work.
Okay.
So you have to look at your complete situation first.
So two people could contribute at the same amount to a traditional IRA but have completely different tax deduction itself.
Oh yeah, absolutely.
Okay.
Absolutely. That's why you shouldn't simply say I contributed $7,000, therefore I get a $7,000
deduction.
Yeah, deduction. So the contribution and the deduction are related, but they're not always the same thing.
Okay, so let's also talk about the Roth IRA. Why has it become so popular lately?
Okay, so one of the biggest reasons is obviously, the possibility of your tax-free qualified distributions, and you contribute after tax money, right? So if your Roth IRA rules are satisfied, which is including the applicable, the holding period and your qualified distribution requirements, your withdrawals are generally tax-free.
Okay, makes sense.
And this is like extremely attractive for people who expect their tax rates to be higher in the future, or people who want a diversification in their retirement.
So can you specify more on what is as tax diversification?
Sure. So let's say, imagine someone has all of their retirement savings in accounts where the withdrawals are taxable. Okay. Now imagine another person who has a combination of taxable, tax deferred, and potentially tax-free retirement assets, right? The second person may have more flexibility in deciding where to take the retirement income from compared to the first person who only has the taxable one.
Great. And do I have to choose one? Like, can I have both?
Yeah, you can potentially have both traditional and a Roth IRA. That is not a problem at all. But you should always remember the annual contribution limits and your eligibility rules always apply. You can't just simply, contribute the full annual limit to each account as though they were completely separate contribution buckets. So your total IRA contributions need to be considered under the applicable rules.
I guess that's one of the points which most has to keep in their mind.
Yes, it is a very important point. And having multiple IRA accounts doesn't necessarily mean you get multiple annual contribution limits as well.
So what about the withdrawals? So what happens when someone takes money out of an IRA before the retirement itself?
See, this is where things can get a little complicated. Because, so with the traditional IRA, your withdrawals, right, they are generally included within the taxable income. And if you're below the applicable age for penalty-free distributions, an additional 10% early distribution tax will apply or may apply unless an exception is applied in it.
Exception is like the reasons.
Yeah, there are certain exceptions which can exempt you from that 10% tax, but those are very specific cases. Your Roth IRA rules are a little different because contributions and your earnings are treated differently.
Separate differently.
So certain Roth IRA distributions may be tax free, but you need to understand the ordering rules and the requirements for your qualified distributions.
So the message here is like, don't treat an IRA like a normal savings account, but understand before you proceed.
Yeah, exactly. So an IRA is essentially designed for primary for retirement savings, right? And taking money out early can have tax consequences, obviously. Although, like I said, there are specific exceptions and special rules in this case.
Great. So let's also jump to another term people has been hearing a lot. That is RMD. So what is this RMD stands for?
So RMD stands for required minimum distribution. Right? And generally, when us as taxpayers with traditional IRAs eventually have to, start taking required distributions once they reach, the applicable age under our current law. The rules have changed over the years. So the exact starting age depends on, the individual circumstances and applicable law as well. But RMD rules are important because failing to take, the required amount can result in significant tax consequences.
And what about the Roth IRAs?
Okay, so for Roth IRAs, under the current federal rules, the original owner of a Roth IRA generally doesn't have, lifetime RMDs. So that's another feature that makes Roth IRA quite attractive for, retirement planning strategies.
Yeah, great. So before we wrap up this session, what are some common mistakes you see taxpayers make with the IRAs itself?
Okay, so in this case, I'll highlight a few. The first one is contributing without checking your eligibility. Right?
No big mistake.
Yeah, that's like a rookie mistake. Everyone does it. Very normal. Second one is assuming every traditional IRA is deductible. Also very common. Third one, making an excess contribution and you're not even correcting it. Because obviously you'll have bigger impacts and things back at that point of time. And then fourth one would be taking an early distribution without understanding your possible tax and penalty consequences. And then for the fifth one, I'd say failing to consider how the IRA withdrawals will fit into your overall retirement and tax strategy.
So basically you're saying it's not just about opening an IRA and putting money into it. It's much more bigger picture though.
Yeah, it is. So the bigger question is what type of IRA fits your situation, right? What tax benefits are available and how will it fit into your overall plan? So you have to look at the entire bigger picture.
Great. And one more last question. Okay. So people often hear about both IRAs and 401ks. So what's the basic difference here?
Okay. So a 401k is generally an employer-sponsored retirement plan. Right? While an IRA is an individual retirement agreement that you establish for yourself. So a 401k can potentially offer, employers matching contributions, which is a very huge benefit. It's a big major benefit. An IRA, on the other hand, it can provide additional retirement savings opportunities, and depending on the type, obviously, like we discussed earlier, different tax treatments and investment choices. So many people can use both of them as part of their retirement strategy as well.
Great. So basically, you're saying it's not necessary like IRA or 401k. It can be IRA and 401k also.
Yeah, exactly. It can. You don't really have to choose one
between that or this.
Yeah, you can obviously juggle and work around between the two if it's possible.
That's a great way to wrap up this session then. So if we had to give our listeners 3 simple takeaways about IRAs itself, what would that be? What would you give to them?
Number one, understand the difference between your traditional and Roth IRAs. Very important. Number 2, know the contribution and your income eligibility rules for the specified tax year. Right. Number 3, don't make IRA decisions based solely on today's tax situation.
Yes, always.
You have to always think about your long-term retirement and that tax strategy as well.
So thank you so much for joining us and making IRAs little less intimidating than before what we heard. So it was a great way of explaining.
Yeah, thank you. It's always amazing to be here. It was great being here as always.
Great. And to everyone listening, remember, retirement planning isn't just about saving money. It's also about understanding how taxes affect the money. So make sure to consult and plan before you start it. Also, for such kind of topics, make sure to subscribe to the channel, share the video for a person who needs this. So we'll see you guys in the next episode.
Yeah, we will.
Bye-bye.
As always, take care.